Hi everyone, it's Nikki here with your National Housing Update. Following the reopening of the housing market in the UK, demand has increased and a stamp holiday was introduced to help sustain momentum. Newly agreed sales are reportedly strong and house prices seem to be holding up. The government has vowed to use this moment to build new homes and infrastructure, promising a £5 billion New Deal and introducing new laws to Parliament to support new housing and boost town centres. The English housing market reopened in mid-May, with Scotland, Wales and Northern Ireland opening a little later. Since reopening, we have seen increased demand reported across the board. According to Rightmove, the number of monthly sales agreed in England during June were up 15% on last year. Zoopla has also reported that applicant demand has doubled. According to HMRC, in the UK, 63,250 transactions completed in June, which is up 31.7% on May, but still 35.9% lower than 2019. It will take time for the reported increase in newly agreed sales to complete and be reflected in the transaction figures. House price indices have been varied, with Nationwide reporting -0.1% annual growth in June, which is likely to reflect cautious lending in uncertain times. On the other hand, Halifax reported 2.5% annual growth and Hometrack a 2.7% increase. House price indices are likely to reflect sales agreed before lockdown, and therefore we are yet to understand the impact increased demand has had on prices. Rightmove House Price Index, based on average asking price of properties, reports a 3.7% annual increase. The Chancellor announced a stamp duty holiday from 8th of July to the 31st of March 2021 in England and Northern Ireland. Buyers will not pay stamp duty on transactions below $500,000. In 2019, 90% of all sales were under $500,000, therefore the majority of transactions will be exempt. Existing homeowners and investors will benefit the most, as first-time buyers were already exempt from stamp duty under $300,000. The stamp duty holiday aims to sustain the increased demand following the property market reopening. Early indicators are already reporting increased demand. According to Rightmove, the number of monthly sales agreed in England increased from a 15% to a 35% year-on-year following the stamp duty announcement. Wales and Scotland have announced their own stamp duty holiday until the 31st of March 2021, with properties under £250,000 being exempt. How has the pandemic impacted the economy as a whole? COVID-19 and the public health measures taken to contain the virus have caused a large shock to the UK economy and public finances. The economy rebounded slower than expected in May, growing just 1.8% since April. The economy is now 24.5% smaller than it was in February. All three scenarios proposed by the Office for Budget Responsibility suggest GDP will drop by more than 10% in 2020, although some economists are more optimistic. This will cause a rise in borrowing to between 13 and 21% of GDP. The measures the government has taken to provide financial support to individuals and businesses will help limit long-term economic scarring. OBR expects no long-term economic scarring in the upside scenario, but there will be some scarring in central and downside scenarios. Despite the economy's slow recovery, the months ahead look positive. Low mortgage rates will help support higher prices, and the stamp duty holiday will help maintain demand. The end of the furlough scheme in October could weigh on market activity, however, forecasts remain optimistic. The OBR central scenario expects 750,000 transactions in 2020. Given that 444,280 completions took part in the first 6 months, the current momentum and stamp duty holiday, this could be an underestimation. Longer term, transactions in the central scenario are expected to reach almost 1.5 million in 2021. The upside and central scenario expect house prices to remain subdued in 2020. However, both anticipate strong price growth in 2022.